Anybody got anything weird on their head or on their face?
Well,
Anything in the
hello.
background?
Welcome everybody to our daily COVID-19 update on Monday, March 30th, 2020. I'm Michael Lee with Reconciled, and we have here 4 other accounting professionals across the country. Why don't you introduce yourselves? I'm Michael Lee with Reconciled. I am normally based in Burlington, Vermont, but I am in Tempe, Arizona today. And Jacob, how about you?
I'm Jacob Schroeder. I'm from Ohio. I run a firm called Ascend Consulting.
I'm Chris Macksey. I'm with Prefix Accounting.
Dan, we can't hear you, Dan. And that's Dan Luthi with Ignite Spot. And the beautiful Amy Walker is here with us as well. Amy?
Hey, Amy Walker, Houston, Texas. Happy to see all you guys, even though I saw most of you many times this weekend. Happy to see you all again.
So Amy, why don't you kick us off with our update today?
Yeah, sure. We, like I mentioned, there are many accounting professionals, I'm sure HR professionals, attorneys who worked most of the weekend trying to digest the CARES Act that was signed into law Friday night. There was a lot of talking, a lot of reading, a lot of number crunching, just because we knew, I think, that today the email was going to blow up and the phones were going to start ringing, and we wanted to be prepared, you know, to help our clients start navigating this process. So we thought today might be a good day just to take a deep breath, say it's Monday, I think it's March 30th. Where are we and what do we know? So I'll kick off by just giving a high level overview of what we all digested over the weekend, and then the guys can jump in. Everybody has done some deep dives on most topics. And I think it's also important to point out that we all come from different types of firms. Some of us are, you know, small firms, like that's me. We have 50 recurring monthly clients. In addition to understanding this, our team is gonna help our clients, we're their accounting department. So we're gonna be helping them crunch their numbers and get ready to navigate this. Some of us work for bigger firms and we just may be in an advisory role to walk our clients, and then they'll go take the information. So I think the data we're gonna give you today is pretty applicable no matter which role you fill. So CARES Act, and before that, what is it, FFCRA? I'm looking at my notes over here. 3 phases that we'll talk about. The first 2 phases are really geared to protect the employee and provide some liability limits for the employer. Phase 1 is emergency leave. So if you have employees on your record as of, what's the date, guys? April 2nd?
April 1st.
April 1st. If they need to take emergency leave because of coronavirus, they can be paid up to 10 days for that. And their rate of pay is capped based on if they are taking it for themselves or if they're taking it because they have to care for another. So that's phase 1, that gets you through 10 days. And then phase 2, the Family Medical Leave Act kicked in. It was slightly amended so it could be applied to deal with people dealing with corona. And that is to provide an additional 12 weeks of capped pay for an employee who either has to care for themselves or care for another. So that's phase 1 and phase 2. And then phase 3 is the biggie. This is the one that was signed into law Friday night. Chris Macksey spearheaded a group of us to try to digest, and he's put together like this I'm calling it a manifesto. And it was so cool to watch because there were probably at one point 10, 12 people in the file at the same time working on it over the weekend. You could see edits going everywhere. It was so much fun. But that's the one so if phase 1 and phase 2 protects the employee, phase 3 is really geared to provide for the employer. It's providing funding through the SBA 7A loans, correct me if I got that wrong, to help you get through the next 10 weeks, to provide you money to pay your employees, pay your rent, and keep your lights on. So that's what all the buzz is about today. So it's a new source of funding to help some small business employers out. To get the guys to jump in, I thought I would tell y'all what I've been hearing this morning in my emails and on the other end of the phone. I'm getting questions like, can I apply for both? If I laid somebody off preemptively, can I rehire them? Where and when can I apply for these loans? And then what do I need to get together to be able to be ready to apply when the applications are live?
So I'd say the first thing to note with this is that all of these questions, we all digested this information over the weekend. Now we're in the phase of like, now we all have questions. And so some of these questions we have answers to because it was written out in the bill. And then there are other portions of this that are questions that are going to continue to exist until we get what's called guidance that illustrates in finer detail what it is that needs to happen.
And to that point, nothing we do in this webinar here should be considered legal or tax advice. Obviously, this is our interpretation of this today, with guidance issuing that could change tomorrow. But obviously we are, I think on this group, many of us are entrepreneurs as well, and we realize we can't always wait on official guidance. We have to make some real assumptions and move forward, right? Because that's the reality we live in, that you can't always sit around and twiddle your thumbs and wait for everything to be perfect. Sorry, Chris, for interrupting.
Oh, no, that was lovely.
So Amy, I think those are the same questions I'm getting today. I've gotten over the weekend related to what do I do? How do I apply? Can I get both? What next? So the first thing I want to remind people on is that you can apply for the disaster loan, and the SBA just reopened a new website for form, and that's more streamlined. And really that's more streamlined, exactly like Chris said. And that's really for those who, it's a great option for people who don't have payroll, right? If they don't have people on payroll, let's say you're a property owner and you have a lot of rental properties, and now you're not going to get your rent income, or your kind of business that just does not have a lot of employees or independent contractors or any real people working for you. So you can't really get the PPP loan, relief loan. Great option. It's a long-term loan. It's up to 30-year payback period. You have to be in a disaster declared area, which I believe most of the country is now, but you still have to make sure you are. And so you might be in one of those rare areas that has not been declared. You can get a $10,000 advance fairly quickly in the application process. And you should expect your money, your actual disaster loan money, to not come to you for 3 weeks at minimum, if not more, because there's a backlog of tens of thousands of people on the disaster loan process. Also, you can borrow up to $2 million. Again, it's up to a 30-year payback period. It's a very low interest rate, 3.75% for for-profits, 2.75% for nonprofits. And it's great for those who need money now because of the $10,000 advance. But also it's a loan, right? So regardless, it's a loan. And what I've been advising my customers at Reconciled is whether you take this or the other loan, the relief loan, remember it's a loan, and you have to assume that there's still a business that's intact after when we start the recovery. So if you're going to take this loan, but you're not going to be able to reopen your business still, or you don't have customers that are going to come to your store or your business to purchase, then you need to really assess whether or not your business is actually an ongoing concern, and whether you should take this loan at all. Okay, you need to assess that with your advisor, with your accountant, anyways, regardless of what loan you go with. But the disaster loan is available now. You can do it directly with the SBA website. Your banker, your attorney isn't going to be able to help you do things. Now they can help you with the form, and there are people who can charge you. You can make an agreement to be charged, and those and there is a place on the form where they would fill out their information to disclose that they're charging you and helping you with that. But at the end of the day, it's still a loan, and that's what's available now. The relief loan is not available to apply for yet, and you're going to go through your SBA lender, approved lender, to do that, and it's not available yet. So just letting people know that. And the only other advice I have, I'll let somebody else talk after this, is don't look at these as growth loans. So these are not for you to grow or double your business with. And this is not a how do I tread the line and still get forgiven money loan. Okay, this is actual, on the relief part, this is actual payroll, and it's going to be capped at $10 million borrowing. And if you don't rehire people, or you don't spend it on payroll and the other expenses listed that's required, it will not be forgiven. And so it will just become a loan. So in both situations, treat it like a loan, and assess whether your business needs it to sustain itself, but not to grow. It's not for growth. It's not to be treated like private equity or VC money or investor money. It's an SBA loan. And so that's kind of some of the advice I've been talking to people about today.
And
Michael,
so, Michael, one question for you on this is the loan that everybody was applying for previous to Friday, the SBA loan, from the website from 1985, the same loan that they're applying for now that is the 1987 website?
Yes, it's the same. Yep. It's the same disaster loan.
You're acting like 1987 was a long time ago.
Yeah.
And I might take a little offense to that.
Not that long ago, right?
I mean, it was only 2 years before I was born.
Yeah. So yeah, it's the same loan. It's the same. The website's the same website. It's just a different format. So yes, you may have not finished the first iteration. You may not even be done with the PDF forms that were up this past week. And now you have a new website to use. It's the same disaster EIDL loan that the SBA is administering. No bank is administering. No one else is administering. Only the SBA. So if you get an email that says somebody else is administering a disaster loan, they are scamming you, because only the SBA is doing it directly on their website.
Okay,
Michael,
so let's hop back to just what you said before, because I think it's important, because we're talking small businesses and not everybody has a relationship with a banker.
Right.
The funds that were approved on Friday, the PPP loan, those are administered through local banks.
Correct.
That are approved to administer them.
Correct.
So if you have a community bank that you work with all the time, you can contact them now.
Yes.
See what they're doing, but that's the more specific loan that was just under the CARES Act. So
yep.
2 places, yeah.
And I've received a lot of questions on that one today from our customers from that standpoint of, if my bank does issue these, is that the best person to go to, or is there someone who's going to streamline this faster for me? And the advice that we've been giving to our customers is not every bank is treated equally in how many SBA loans they process on a regular basis. And so just because your bank is an SBA approved lender doesn't mean that they have a huge amount of familiarity or are working on the back end how to process these SBA 7A loans for you from that standpoint. So before you dive into, as a customer, even right now, because you can't actually apply for it, but sending information and categorizing all that stuff, make sure you're actually asking your bankers correctly, asking those fintech companies who have been approved to be able to give you recommendations on, does it make material sense to use them or to go with someone else? Because they're capped on interest rates, because they're capped on a lot of the other functionality, you want to go with someone who's familiar with working with the SBA at a large volume. Doesn't mean you're going to get lost in the cracks. I don't think so. I think it just means you're going to make sure you're going to get better care because they're building a system to manage that much type of return instead of, hey, we did one SBA last year, let's connect with it because it's the local regional bank we're used to dealing with. And so I think that adds a lot of clarity for some of our customers as well, and making sure that you're picking the right partner to go with through this process as well.
Yeah, Dan, I'm going to touch on that as well. We have noticed some of the banks that do a lot higher volume are also capping out though. So if you go through those calculations and say, I'm only going to need a $50,000 loan, make sure that lender that you want to work with is willing to do a $50,000 loan. Because I know we've talked to a couple that they're like, anything below 100,000, we're not interested in right now because they're expecting so much volume. So take this time now. You can do the simple calculation of 2.5 times your payroll cost to figure out what that loan value would be on a payment protection plan loan, and start working with the lender to say, will you work with me on this? Are you a right fit for this? Because I think building those relationships up front, you don't want to get halfway into the application process once it opens, and then lender's like, oh yeah, we're not going to help you. So take that time now while you have it before you get in there. I do want to jump back to something Michael said and just reiterate again. You know, I had somebody reach out to me this morning and they're like, what are those SBDC, like SBA loans that are just getting forgiven, that you don't have to pay anything back? And reiterate, it is not free money, right? It is a loan. There's a potential that you will get forgiven, right? There is a criteria to get money forgiven. And I will say right off the bat, if you're not bringing back all your staff, you are not going to get everything forgiven. And you really need to look at this, right? And you have to keep your staff on for so long. So if this continues, right, if all of a sudden we are still having these issues in the shutdowns come July 1st, you may have an issue in getting any of that money forgiven, and you are going to be on the hook for all of it. So that's important to understand. You also need to understand some of the tax credits are not eligible to, you're not eligible for if you go into this. And if you're not calling our staff back, you may be better off with tax credits in certain circumstances. So every situation is unique here, but never think of it as free money. I just want to draw that line there. Never think of this as free money. If you're thinking of it as free money, you're likely looking at it wrong, and it'll probably come back to bite you.
I think that's great advice. Yeah, +1.
I think that if we walked through the timeline of how we were feeling about all these programs from Friday night until right now, it would probably be like, when we first all looked at this, we all looked at the Paycheck Protection Program loan, and we're all like, this is free money. There's like 100 dogs chasing after this one mailman right now. We're all like, this is fantastic. And then like, as the weekend progresses, we're all just like, wait, what about this thing? And then there's this portion of it that's questionable. And then like, what about having to bring back all of these people that you've laid off and then potentially lay them off again 8 weeks later? And then by the time we're getting to the end of it, we're like, there's not a lot that really, it looked like from the get-go that like 80% of businesses were going to go after this one. But after looking at all of this information, it's probably closer to like 30% of the businesses that are going to like go after this as opposed to something else.
And I think, you know, I think the point of that too, though, is it's super important to understand what your business needs. And I think that's one piece that's super crucial through that process as you're looking at it, because there's a lot of questions we've been getting today too is, well, what if my revenue doesn't dip during that period of time? Will it still potentially be forgiven through that process? What if my revenue increases during that period of time? Will I potentially be forgiven through that process? The hard part about that is we can only assume what potential boundaries are created based off of those pieces. So like everybody said, it is debt. Make sure we understand that. We are borrowing money. The hope is we are going to be forgiven. So make sure your records are tracked very specifically on what you would have done had something changed or happened to it, who you brought back on or who you retained through that process. But also remember to include through that same space, it's not just factoring wages as a part of this calculation. It's factoring in your benefit packages that you're providing to your employees as well. Those numbers are factored into that variable as it's going through. So make sure you're not just pulling one line off your profit and loss when you're building these calculations and making assessments and jumping from there off onto everything. Make sure you're pulling payroll report detail from your payroll provider if you have a large team. If you're a solopreneur, look at what your owner distributions have been or your wages have been through that process. and make sure you're including all of those facets, because that becomes really crucial to make sure you're accounting for it correctly and tracking it, as well as when you're going through the application process, make sure you're asking the right questions of, is this an expense that's included through this process that is potentially forgivable in the future? Because if you have some sort of arrangement agreement that you're providing stipends or additional expenses to certain employees and not, some of those things may not be included later on down the line. So just want to make sure that you're careful in those assessments as you're going through it. Not to defer anybody from not going down the road from the payroll protection plan, because I think it has some great opportunities for businesses who are trying to maintain and keep consistent employee growth, who are trying to add additional economic value to their organization, who are trying to retain good quality talent. Understand, to one of the comments that Michael also mentioned on Saturday and even again on Friday, is part of this plan also is those employees have the opportunity to be able to take leave from your organization. And so that needs to be a factor as a part of your process and what you're doing also. That these people can take time to spend time taking care of their family if for some reason they have children who are in school who aren't going to be available to have that type of supervision or things. Your work is not a place that can work fully remote, or even in that space, you can work remote, but you have so many kids or they're so loud or crazy or whatever it is that you're not in a space to be able to do work. All of that can impact that decision piece, and they are available to be able to take that piece. But also with it, unemployment is there available for other employees as well, who your firm may not, or your company may not be able to work through the whole program and survive on the back end.
Yeah, that's a great point, Dan. And another reminder like that, if you haven't done scenario planning with your business on the employees that are planning to take time off, 10 weeks under FMLA to take care of their children because of the impact of school closures in your state, then you need to have that scenario planning. And it's better for you to know now than to get a surprise on April 2nd or April 1st from your employee. Just be transparent about it and get that planning done to make sure. And then also remember, as we've said, even though there may be loan forgiveness for your payroll and other expenses under the PPP, which is not available to apply for yet, so your business has to sustain itself too. You have to also sustain your business while you wait for that money to come to you, which is going to take weeks. It's going to take weeks to get you that money. Secondly, you're limited to 2.5 times the monthly payroll average calculation. So that actually might be way less money than your business needs that you could get under the disaster loan right now, if you went to apply right now on the SBA website. So all that you need to
also talking about your caps as far as how much you can 2.5 times payroll. You also have to remember if you have a lot of high level salaried people in your organization, I mean that payroll for them is capped at $100,000.
Yes.
So that's going to lower your money that you can get under the PPP loan. What you mentioned about what are you going to do in the short term reminded me of a conversation we had with Dan at the end after we turned the cameras off last week. What do you do for these businesses that need some cash now? They are good, viable businesses, but they haven't had a sale in a month. And Dan had some good suggestions.
Yeah, I think there's a couple of things that we need to look at as business owners or as accounting professionals through this process. We've been very clear that there's a timeline that it's going to take for us to be able to get the money from these SBA loans and things from that nature. We know that there's limitations on how quickly we're available to get those funds. Now, we also do understand that there's the ability to get the $10,000 grant under circumstances that would require you to be able to need funds immediately in order to be able to maintain. If that's the case, make sure that, again, you're contacting your bank or contacting your accountant to help to be able to clarify what you need in order to be able to apply to that for that to be available. I do want to note on that $10,000, I believe if you do get the PPP plan, that money is no longer classified as a grant, if I understand correctly, that it actually ends up going away and is included as a part of your PPP plan. And so, again, becomes understanding the significance and the importance of those pieces. But Also understand too, there are additional lenders that are out there who are providing and supplying supplemental loans that can help you get through the hard times and positions you're in right now. There's a lot of smaller or larger type of organizations who are deferring payments for you and interest calculations. All of us know each other because we've worked with QuickBooks for a very long time. One of the lenders that we work with on a regular basis that I do is QuickBooks Capital. They're offering 60-day deferment on payment interest, which in a lot of cases is a great value for a short-term loan or a smaller loan that you're going to be looking for, whether it's $10,000, $15,000, $20,000 in cash that you may potentially need. Now, of course, the position on those loans are going to be depending upon your financial statements and your personal backing and things from that nature. But finding those opportunities that you can get that deferred payment can help you work through this time as you're preparing to file for that documentation and things from that. But again, you have to assess what makes the most sense for my business and should I take on additional debt at this point in time, knowing there's risk. Also knowing with that from that standpoint too, that there are a lot of credit cards and other providers out there right now that are offering 12 to 18, 24 months interest free. Thinking about those as well is something that's super important. And so I think one of the pieces that's most important through this process is understanding before you start going out and gathering a whole bunch of financial instruments in order to be able to keep your current structure of your business in place, start assessing what your actual needs are from a financial standpoint. How long can we go before we take on debt? Do we have all the necessary people or resources that we need in order to be able to keep our company functioning with our current customer base? And do we have to, what types of decisions do we have to make in order to be able to make sure we're making the right moves forward? Because the last thing you want to do is incur additional debt with the assumption that you're going to get some relief later on down the road, and you don't get that relief and you're stuck with a debt that you now have to pay with, some prior assumptions that you didn't have in planning to work through that. And so thinking about all those resources is really crucial. The other thing too, is I'm noticing a lot of my clients are reaching out to their current lenders or their current financial institutions where they have bank accounts with, and they're talking about lines of credit. What things can I do to get a line of credit with you just as a safety net? Not that we need it. We've got 6 months cash, we got 3 months cash, but what types of things can we do to ease that burden potentially that we're going to run into? Some banks are being a little bit tough, I'll be honest, that we've seen too, that they're not as super excited about putting in those positions. But at the same point in time too, there are banks who are willing to lend to people depending on what their financial viability is. And so it could create some really good safety nets for you through that process.
Also, to that point, there is a piece of the disaster legislation out there that is SBA Express loans. So if you have an SBA loan right now, or you have a relationship with an SBA lender, you can reach out to them on the disaster loan side and look at an express loan. Those all are smaller dollar amounts, but they can typically move a little faster on those and get through that process because they already have your information. And that's really the goal here is if you already have a loan with them, you've been sending them documentation on a regular basis, they have some of that, so then it can speed that process up through the express loan program. So that's another way to look at that if you already have an SBA loan. But I think those alternative lending sources are super important, right? Many of us, if you go the disaster loan route, 3 weeks at best, you could be 6 weeks out, 2 months out. When you look back at some of the hurricanes where the SBA's had a much smaller disaster loan budget, and it's taken months at times to get that money out. So with the amount of applications they're getting, which is going to be record numbers, we have to expect, month to month lead times to getting that disaster money. And as a result, we probably have to look at some bridge funding options in there, right? Like what are the bridge loans that you can get, short-term lending things just to be able to get by. Now, the problem with that is, well, the good news is under disaster loan, then you could make your payments back with the disaster loan side. Under the PPP program, you can't make debt payments. So know that whatever bridge lending you have, you're going to have to finance out of your other revenues, not out of the loan proceeds from the PPP program. I also think it's important to, we're spending a lot of time on the loans, but I'm also going to say, remember they're a loan. There are times, if you have the cash flow, other options make more sense. Even things like the employer retention tax credit. We've seen some calculations where companies get more money under the employee retention tax credit than they do under the PPP loan program. Granted, you have to have cash flow to be able to do that, but if you have that cash flow and you retain those employees, you could actually get a larger benefit under that program. Now, many of us I know are in that cash crunch position, but at the same time, to Dan's point, if you can get some funding up front and some bridge funding, you maybe can extend your cash runway far enough that you can instead leverage, you know, the employee retention tax credit or some of these other credits that may be a better fit for you.
That's a good point, because I know when we all started tossing this around this weekend, you know, you even start thinking about your own firm and your own practice. And while right now things may be looking fine and you're a responsible business owner, you've got a cash reserve, you know, what happens this summer when maybe your clients can't pay you for a while? So I know that there were a lot of firm owners talking about, well, I'd be crazy not to go ahead and get that cash flow. But what you're saying makes a whole lot more sense. If you are cash healthy right now, there's another part where you can find some savings through the tax credits, and worth investigating or asking a tax professional if you don't understand that part versus taking on the debt. I think that's a real good point.
Yeah, I just feel like a lot of people feel safe with the PPP program because they feel like it's going to be forgiven. But I'm cautioning that there's a lot of risk with that. That forgiveness program has a lot of risk to it. There's easy ways to make missteps. There's some pitfalls in there that could cause it not to be forgiven. So look at it as debt and explore your other options, right? And say, is there a more conservative, safer option that gets me to the same point that I have the cash runway to be able to leverage?
I think one of the things worth mentioning with this is that there still are use cases for the Paycheck Protection Program. If you're in a scenario where you're not necessarily in a cash flow crunch, but you're close and you would like a little bit of extra breathing room and you can afford to take on this debt if it comes round, this isn't a bad plan for you. It's a low interest loan, 10 years. You might get the benefit of having some extra breathing room with this loan to pay for payroll. You were thinking about maybe laying off a couple of employees, but it will get you through this. Then this program might actually work out for you. But there's not a lot of use cases where that is the situation. But it does still have scenarios in which it works.
And Chris, I actually want to talk on something that you and I touched on. So I've had employers come to me and say, I want the payment protection plan because it's the right thing to do for my employees to bring them back and make sure they have a full paycheck, right?
Yeah.
Which, you know, that is a great thing. And sometimes we make decisions that aren't based upon dollars and cents, and they're the right decisions at times, right? And sometimes the people decision is more important than the dollar and cents decision, and we'll figure it out later, but we want to do what's right for our employees. But what's right for our employees has become a little harder to calculate.
Yeah.
Especially now that in the CARES Act, there's a additional federal unemployment pandemic portion that they added $600 a week of unemployment in addition to what the state normally pays every employee. So in this case, they could be making very similar wages, staying at home, not being on your payroll, which means now when we look at the overall situation, they're making the same amount that they would have working for you, and you don't have the risk of being saddled with this debt. You know, before we had that portion, payment protection plan made tons of sense. We bring them back, we restore them so they are getting their full wages. We're going to take the risk for them. It's the best overall case. With the increase in unemployment, you also have to look and say, wait a minute, maybe my employee can be whole and I don't take the risk.
Right.
And in that case, we're both better off with them being on unemployment. And I know that's a hard thing to say, and it feels weird to say that the employee's better off being on unemployment. But that is the reality and the normal that we're in right now, right? So I think that's really important to look at too when we say, oh, I want to keep my employees happy and I want to make sure that they get what they deserve. So I'm going to do the payment protection plan to make sure of that.
And a lot of times, those people that you're worried about are lower income individuals. where that $600 a week is more than they were probably getting paid before. So you might bring them
and they're getting
on.
600 plus the state amount, which every state's a little
Correct.
different, right?
Yes.
But they're getting 600 plus the state amount of unemployment.
Right. Right.
That
So
sounds like a topic that we could spend an entire episode on. You know, what do unemployed workers get? I mean, there's so many. I mean, we could talk about that for another hour.
Yeah, and I think this is important. And I'm just going to speak kind of frankly here. You know, on Wednesday, employees can choose if they want to take FMLA or not. Like, it's mandated that they get that choice. We've had some real discussions. Like, we can't cash flow FMLA. You know, we only have a couple people left on payroll. We've laid most of them off. We have those ones on there. We're afraid that they're going to take FMLA. If they claim FMLA, they're only going to get 66% of their payroll, right, under FMLA, and they have to go 2 weeks unpaid. If I know that about the employee and they're not essential to my operation and I can lay them off, I'm actually doing a favor to that employee by laying them off. Because by laying them off, they're going to get 600 plus the state unemployment, which may be more than 66% of their normal salary. Plus, many states have waived the week waiting period. So if you've waived the week waiting period, now your employee is getting pay day one and not having to wait the 2 weeks to be there. The other thing is FMLA only goes 10 weeks. If this disaster goes on longer than that, well, the 600 from the federal goes until July 30th. So we just bought extra time there. So in wanting to do the right things for your employees, I'm going to say the CARES Act complicated the picture a lot on what the right thing to do for your employees are. And I do think,
I would.
I'm going to say, I think we're going to dive into a whole section on that. I think that's going to be tomorrow's topic. Dan, touch on it though, for sure.
Yeah, I think the one thing, and I kind of sit in the middle when it comes to utilizing PPP versus utilizing the unemployment and things from that standpoint. And I think the biggest part about it comes into places is that you as a business owner have to make the best educated decision for your organization and what your organization is doing as you're going through. The intent of the PPP plan was to put as many people, to keep as many people off unemployment so that we can continue as an economy to continue to flow and grow and to maintain. If you do decide to go down that path, make sure that your employees aren't just sitting there doing nothing. Make sure that they're actually producing for you as an organization through that process, whether that means that for one of my clients at the time is, has musical classes and things from that standpoint. If in those cases you decide to build a library of Zoom videos or Loom videos or something from that standpoint, that you can build a deck that creates another opportunity for viable income in the future, that is a smart business decision on your behalf to utilize those resources to create financial viability for your organization in the future. And that's the intent of this. It's not to have them just be off unemployment, but they're doing the exact same thing, binge watching Netflix and trying to get through whatever video game they're playing or, do things from that nature. The goal of it is to be able to create productive value-added resources for the economy so that you as an organization can flourish after the fact. Now, there's going to be situations where you're limited by what you can do. And I think that has to play into your decision-making process also of what types of decisions you make and what type of loans or forgiveness vehicles that you go look for as well. You have to be really careful that you're not putting yourself into a trap position to where you hope that it turns into something, but yet materially it actually doesn't. It ends up creating more complication for you.
That's great, Dan. Well, we could talk for another hour, but we're all busy accounting professionals, I'm sure. So we'll do another update tomorrow. This is a daily, that's why it's called Daily Update. And we'll be doing it on the FMLA updates that was passed and how do you prepare your business for that this week. But thank you guys for the great daily update. Thank you, Amy, for leading us through all that.
Good to see everyone.